I think the weekend the Lehman Brothers went down, we were all partying. We had really no idea what would transpire over the course of the weekend. We were just trying to have a good time, just taking shots and just being in inappropriate places kind of thing, right?
All right, guys, welcome to another episode of Breaking Barriers. This is our first one in the Freedom Tower. There's a lot of amazing things that are going to come from this space, but on top of this being the first one in the Freedom Tower, this is the second one that my guy Jake Thomas is co-hosting.
Yep.
Welcome and thank you for being here, brother.
Dude, 85th floor, top of the world.
Seeing every cargo ship coming through.
It's pretty cool.
Wild.
I mean,
and you were, so wait, time out. You flew in from Miami yesterday?
a couple days ago.
Okay, when did you fly? 24th?
24th.
24th.
Fly back tomorrow.
Tomorrow.
Yeah.
What time? You like early bird?
Yeah, of course.
I love it. I love it. And so with us here today, this is somebody who you're never going to know. This is somebody who you're going to be curious about who this is, but they have some insane experience and insight on the LIBOR scandal. Is that how you say it? LIBOR?
Yeah, LIBOR.
LIBOR scandal. And I'm going to pass that over to him eventually. But so with being as cryptic as you can, obviously, Jake, you found this guest, right? So what enticed you to say, damn, like this would be a good fit?
He's got a cool life resume.
Checks a box.
Renaissance man is like kind of a common theme
Yes.
with us, I think, on the show, right?
Yes.
With people of unconventional backgrounds and seemingly, besting adversity frequently. Well, this guy's done that a lot.
Right.
Multinational, multicultural, has done it on several continents now, and it's been part of a lot of big parts of financial history. Some people would say it's infamy, but for sure now it's funny, like, laughing about it, calling it history, because it has been, almost 15 years since the 2008, right? Or
which is
however
wild
many
to
years,
think
16,
that time has flown by that quickly.
And, again, big pivotal parts and other things that he's been a part of.
Right.
And I think it's cool for people to hear that, to know that, this guy breathes air just like everybody else. He puts his pants on, I think, the same way as everybody else, but
we can't be sure.
He's a pretty superhuman intellectual too,
Yeah.
Did a lot of things before he was 20 years old as far as accolades and diplomas, and then did a lot of things professionally since then.
Right.
And he's a good tennis player too. I think I can say that.
Ooh, okay, I like that.
He might not say so, but I know he is.
Is that at the top of the resume?
I'm okay. I'm not bad.
Is that kind of like golf, where everyone's like, I'm okay, but like they'll kick your freaking ass?
He's pretty good, and we've definitely paid a few light bills to some of the more frequented watering holes in the city.
I love it.
Back in the day.
So there's some history.
Yeah.
I love it. So we're going to be respecting our guests' privacy, obviously, so we will not be, sharing that. Also, additionally, for anybody who emails us, reaches out, asks us who it is, we will not be telling you.
Yeah.
Let's dive in. So first of all, we're here in New York. It's beautiful today, right? We have our guest here. So before we dive into the craziness, I want to dive in a little bit and understand a little bit more of how you got into financial. Like what growing up made you say, like, I want to be in that industry?
Yeah, so I think a lot of people that go into the industry, they have this idea that they want to become an investment banker or whatever it might be. Maybe it's a hedge fund or quant something, right? A quant QA, I guess we call it, quantitative analytics, because you're an engineer, you're a math degree or something. My background is actually a math graduate student, and I had no intention of going into finance, really. I was pursuing a doctorate in pure math, of all things. It wasn't like applied math or statistics. So it really had nothing to do with, well, I shouldn't say nothing to do with finance, but very little to do with financial industry at large, right? And my professor happened to be someone who's well established in the financial literature, and he won several awards for it. And so he recommended that I give it a shot, because I was really interested in gambling and sort of human behavior and putting mathematical methods behind it, right? And so that's how I really got into it. And at the time, I guess I felt a little bit like I'm selling out because my peers were going to become academics or going to work for national defense or that kind of work, and I was going into what I guess business majors were going into, or people with that wanted to come to New York City and have a good time and sort of have a career in finance, right? And so that's how I got into it. And my first stick was in Tokyo and being a trader. So that's how I got into the business.
Oh wow! So, and full transparency. So it's interesting. So this is the first time we're doing this in the Freedom Tower, right? So we're literally lugging. We got Jake with two like suitcase-looking things coming up the stairs. We got Ty with all his stuff on his bag. I'm dropping you guys off.
Tight.
Security's tight in this building.
Tyler was like, "Wow, this is pretty intense security." I was like, "Well, if there's one building in the world where it's pretty tight, I'd say this is probably it."
It better be this one.
It was pretty buttoned up.
And so the setup and everything like that was obviously took some time. So in this podcast, we have gotten because in the building you have until 7 p.m. and we are towing the line. So with that said, I want to dive into just your experience in that LIBOR scandal, right? Like one of the things that's so interesting is like it's so rare, I think, for people to be able to communicate. Like the major popular people that you see that have been glamified, I guess I'll call it, is like the Jordan Belfort being the Wolf of Wall Street, having a movie about him, like that whole thing. But you never find out about the people who are just a part of who were a part of Stratton Oakmont, right? So it's so interesting to be able to have somebody here today who was a part of something without directly being a part of it, and can kind of like live to tell the story, right?
Yeah.
So can you just give us like a high level of your experience?
Yeah, I think a lot of people don't really think about benchmark rates or interest rates at large, right? Because I think the thing that we interact with as consumers on a daily basis is maybe things like mortgage rates, which if you buy a house and get a mortgage, it's like once in a lifetime kind of. Maybe twice, a few more times here.
For most people,
yeah,
yes.
Yeah, and so you don't really think about interest rates really, and these are sort of like fictional numbers that are floating on CNBC or some news television, but it's really heavily rooted in our everyday life, right? Because every time you make a transaction, and all these money flow take place as a consequence of those benchmark rates. So for example, student loans and anything, I guess, that involves lending and borrowing, which makes this economy work. It's all based on interest rates, right? And so it was a very big scandal, I think, for the people that have, I guess, a larger macro vision of what's going on, especially on the economy level, and it had a very huge impact because you could just move it with just few people trading it in the marketplace, right? And so I think the thing that was immoral or that was illegal, I guess, right, was that the fact that people were colluding together to move it, right? And so
different banks.
Yes. So it's akin to two major players. Let's say we're talking about liquor earlier. So you had two distributors colluding together to sort of squeeze out a price or maybe constricting a supply channel to make something more expensive or to make something less available, right? And so that's obviously gouging and of sort, right? And that's a huge impact, not only just to the people directly involved in the transaction, but a bigger impact, a worldwide impact, because U.S. dollars are the reserve currency. So every transaction that's benchmarked to say, auto loan or maybe even interest rates, currencies vis-a-vis interest rates, that could have a very big impact too, right? And so that's kind of I would say the bigger vision, bigger view of the LIBOR scandal.
Okay.
And so how did you so when you got served, what was your what was coming down the pike at you? What were you looking at? How'd you feel? Were you surprised? Did you see it coming?
No, I wasn't very senior yet at that point, and I was involved in the transactions, but by the time it came down to me, all my managers and their managers had been, I guess, served, right? And so they being away and they weren't coming to work anymore, and we knew something was going down, and so because there was so much dust by the time it got to me that it didn't feel as, I guess, scary. And you've had some time to prep for it, or mentally, or to get legal assistance or whatever it might be by then. So yeah, it didn't feel as scary.
So good thing you weren't like a senior level at that point,
yeah.
right? Imagine you senior level at that point. That'd be nuts.
Toast.
Yeah. So you started to tell us a little bit about, like, at that time, you were on vacation at an event or whatever.
Yeah.
And can you explain that a little bit? I thought that was so interesting.
Sure. So I was just telling you guys, we were on a bachelor party in Shanghai, of all places, and I think the weekend the Lehman Brothers went down, we were all partying. We had really no idea what would transpire over the course of the weekend. We were just trying to have a good time, just taking shots and just being in inappropriate places, kind of thing, right? And we all started getting calls from New York offices, and we had to fly back on the next flight, basically, and because the market was going to reopen on Sunday, which is very unconventional, because that's to my knowledge never happened in the history of financial history. And so,
for you to be able to experience that's pretty crazy.
Yeah, that's one.
it's a wild one. Nothing really traded in the marketplace, but the FX swaps was open, interest rate swaps market was open, and it's I'm sure even if you could experience the whole financial history as a person, that probably would be top 3, maybe top number 1 experience to see the market moving that way.
What was that flight like? I mean, like, did y'all all fly together back home?
We did, because there weren't that many flights at the time, and this is back in 14 years ago, which is kind of insane. Almost 14 years ago now. So we didn't really have, like you guys were saying, I don't think that there was any Wi-Fi available on while you were in the air. So you were disconnected. Your Blackberries weren't getting reception, and you couldn't really pay the way you can do now to get a network or Wi-Fi to message or to get data. So we were in the dark, right? And when we left, we were obviously checking the whatever we could in terms of market data, like Middle East rates, Middle East currencies, because they were still ticking. There was no Bitcoin at the time, so
not yet.
That was not yet. But I guess there was.
That's about 4 months out, huh?
Yeah. So there was it wasn't ticking in the market the way you could see it. So we had no idea, right? And yeah, it was maybe it was more shocked. We're just shocked more than scared,
right?
On that flight, and we didn't really know what to expect. And this is it's a very important feature of people in capital markets and traders and salespeople. It's really when something strikes you, it's fight or flight. And I'm sure you guys are very well aware of the feeling. And we were definitely in the sort of flight, sort of frozen. In light of that news, right?
Shit your pants mode.
Yeah.
But one of the things though too, I just want to paint the picture, because like literally, like, it's funny how when you're in the middle of making history, it seems ordinary, or even when you're in the middle of just history in general, whether it's a good or bad history, it doesn't seem like it's anything crazy. It's only until after, in retrospect, when you connect the dots.
Like, whoa.
But you mentioned to us that, like, you were on the flight, no Wi-Fi on the flight. It's BlackBerry time. Like, this is like, what do you remember what BlackBerry that you had at that moment?
It was one of those.
They have the ball.
Yeah.
So we're at that phase. Everybody drink that in for a second.
Yeah. It wasn't even the rolling ones. It was just the scroll.
Oh, okay.
Yeah. You know what I'm talking
Single
about?
directional.
Yeah.
Yes.
Yeah. Exactly.
Not 360.
Yeah.
Wow.
Just
And
vertical.
so and just keep in mind though. So 2008, when this was happening, we all have to remember. For people listening in, there's a lot of people I'm sure here that are listening. They're like 22, 23. Again, like, Ty, how old are you?
26.
Right. So like, the iPhone came out in 2004, just for perspective, right? So this is only 4 years later that, like, this happened, right? And for most people who can't digest the thought of a world without an iPhone, like, this is around that era that was just starting.
That had to have been a long flight.
Right.
Were you just like, tormented in your head about like?
Yeah, I think it would have been way worse had I been alone, but because it was with my peers, and maybe it was better that I was with my peers as opposed to my co-workers, because you couldn't really talk about it. And so, but you had, they're not comrades, I guess, but they were in the trenches with you, right?
Right.
And they were going to face the exact same market prices when we walked in. And so that sort of soothed the I wouldn't say pain, but the shock, I guess, right? Because we had just been partying a lot. Maybe it was just being hungover or something, dehydrated and sleep deprived. But it certainly felt. I'm sure it would have even felt harder if I were alone.
How long had you been with Lehman at this point?
A few years now, yeah.
So you definitely have some salt. Like you've taken some scalps and like
Yeah.
you've earned your keep at this point. So it was definitely affected. You were definitely affected.
Yeah.
And certainly involved and knew what was going on. It wasn't just like, oh, we kind of got to go home. It's like, this is my career.
No,
This is my livelihood. This is more than that, because you knew how much more interest you had in that, as far as in personally in understanding, the world and global markets, macro, micro, however you want to say, knowing how affecting this is going to be to the rest of the world.
Yeah, it's hard to say always, just like the way it was with our recent, 2020 pandemic, the way asset prices move don't necessarily have to make sense, right? It sounds if there's a fair value, let's say S&P 2,500 that has to stop there, right? There's no such thing, and so it's a tendency in the marketplace, and this is why I got into financial industry, because I think it's interesting that there are people, the components that move the market prices are people, right? It's always controlled by fear and greed, and that's what makes it so interesting, above and beyond, say, particle physics or theoretical mathematics.
Wait, can you say that one more time for people listening in, though? I think that's such a powerful line.
Yeah, so I was saying, because it's what makes markets really interesting is because the factors that go into deciding and buying and selling, which then move the price, are human behavior and human psychology, and fear and greed, above all, right? And so it's asset prices are interesting in that way, in that oil prices went negative, which how is that even possible, right? It doesn't really compute, right? But it went there, stayed there for a long time. It wasn't just one future contract; it was a bunch of series of future contracts that were negative, trading at negative prices.
Negative interest rates, same thing. How is that possible?
Yes. So I give you money, and you somehow the direction of the interest rates seem to be
right. How is that possible?
Opposite, right? So
you're going to pay me to take your money, because you want it loaned out that bad. No.
And that has persisted for a long time in Switzerland for a long time before the global interest rates went negative. Swiss rates were negative, not just for one day. The maturity of the loan, right? So not an overnight loan, but even out to 3-4 year of loan, they were negative. Which how is that even possible, right? But so there are a lot of things that don't seem to quite make sense, and that is a consequence of the fabric of culture, people's psychology, and that's the reason why we actually have people like sociologists, anthropologists, historians even, and people like that to not necessarily tell us what to do in terms of, say, do we buy or sell Apple stock, but to try to determine what does this mean in the context of larger context of people's understanding of what it is that they're doing.
But what blows my mind there is when you think about even home prices right now, right? Like even like by us, by like the beach, like there's a ranch by me, which is a one-level house, for people who don't know. And my neighbor bought that ranch, let's call it for like 3-something. Just sold it close to like $650. There's nothing special about it, right? But when you think about what you just said, it's like fear, greed, urgency, like the culture, the fabric of culture, right? It's like the person that moved down the block from me who bought that house was a New Yorker during the pandemic that just didn't give a shit. Just bought it. That's your price? Okay, I'll buy it. I just need to, at the time, move away from the city. But when you think about that, that blows my mind, because then you put that, so that's just a home. It's some wood, some grass, it's a shelter, which is important. But it's crazy over time how like an asset even like that, like appreciates so much, but based off of what? When you really think about it, like how can it increase?
It's still earth, and it's still just material.
That it's always been, right? So like that's why that blew my mind when you just said that, because that's what it actually is.
There's a property I'm trying to list right now in Miami. It's a 4-bedroom, 3 bath in Miami.
That's a big
Miami Beach. Yeah, like 2,000-ish, 2,200 square feet, something like that. Purchased in the early '90s by a friend of mine for like less than 300, more than I think 225, maybe around 250, I believe. Now fair market value for that is probably like 2.65.
Talk about
And just to think like that's crazy.
Talk about ROI.
Yeah, like not even renovated, not even refinished or otherwise, but just
Yeah.
have much it's appreciated based on the demand of
Yeah.
popularity.
Yeah.
What'd you
it's
do,
interesting,
man?
yeah.
Like so that happens. You show up. What takes place and how did you get
Actually, and also to that though, I just want to. You said this before we started recording. When you were like, what was it like? Like, did you walk in and see papers everywhere, empty desks? Like,
Yeah.
I kind of want to give the audience that. Like, what was the walking back in for the first time, I guess, or whatever, to clear out your desk?
You land stateside, you're there.
Maybe I guess it's exactly like the way you would imagine anarchy to be
Papers
in
thrown
popular
everywhere.
cultures, right? Like the way you saw it in a variety of movies that feature the fall of this institution, and it was really it wasn't far from that, right? Often you see that the Hollywood version of what anything really is overly dramatic or bastardized in a certain sense, but this one is probably comes fairly close to what was actually going on. Just maybe people didn't take spray paint and wrote stupid things, but we did see some lewd comments about the CEO and that sort of things. Certainly, maybe it was a
Which comes with the nature.
Sure. So it was pretty. I would say not inaccurate, right? In that there were some level of vandalism and yeah, it was just I guess a little bit like the pandemic where people were just grabbing stuff and just running out because.
And then the next day, were you on jobs.com or like proverbially or literally?
At that time, that was when Monster.com was like
Yeah.
Dude, that was when Monster.
I mean, were you out on Wall Street with the hire me or?
I think I was drinking. That's what I was doing.
And also, you got to imagine it's got to be tough having Lehman on your resume.
At that time.
Yeah, especially because you as an interest rate trader, you were in the middle of it, right? And so, yeah, it's actually interesting because it's such a incestuous market,
Right.
the labor market, or I guess the human capital market in interest rate trading is very incestuous, and so it wasn't very. I wouldn't say it wasn't hard. It's just that I think it was easier than finding a similar job in a different
Industry or
or in a different peer group or different bank because of that fact, right? So.
And also, you weren't senior level then, though, too, because like if he was a little bit higher,
Yeah, that's true. Yeah, if you're
it might have been like he knew what the fuck was happening.
Yeah, if you're a senior department manager or something like that, then I think certainly it would have been hard for you to. You probably didn't actually get a job ever again, but you know what? They did very well, and so unless you sort of were stupid with the money that you earned, you probably made out okay, right?
Got it.
Yeah.
A lot of Wall Street dudes that I knew, that like I have a couple of Wall Street clients that like have not been in Wall Street since like the 80s, 90s, but like made multi millions back in the day, and like some of them don't have a dime left of it because when they were doing it, it was pouring on them. So like they would go out, they'd buy yachts, they'd buy mansions, they buy all these different things, and boom, because it was like when you're making money like that, you think it's never going to stop.
Yeah, it's hard, right? Yeah, the financial literacy is even the people that are quote unquote supposed to be the expert, right? That evades them even, right? So I think it's important to really understand cash flow. I don't mean in an Excel sheet or like modeling or anything like that. Just the pure sense of how much
accounting.
Yeah, how much you're earning, what's your monthly take-home income, what are your liabilities, DTI and things like that. And it's really not that hard, right? It's just have to look at your bank statement.
Yeah.
But no one really teaches you these kind of things, which is kind of crazy.
They don't.
It's right from what's his name, Rich Dad Poor Dad.
Yeah.
We
That's
were
true.
just talking about that in the car.
Yeah, man.
Yeah.
Kiyosaki, man. Like
That's right. I think he can be controversial in some of the points that he makes, but I think overall what he says is absolutely true. And that no one teaches you how to manage your money or how to use benefits, which you get all the benefits that the world offers in terms of. It could be even things like credit card, a mileage offer or something like that, right? If you have a strong credit history, you can get an Amex some card without getting into sponsorships and things like that. You could get 50K or 75K of miles, and that could be like a grand to a grand of worth of
flights.
Trip,
which is, it's not a lot of money maybe, but it helps you out, right? You can buy.
It's something.
Yeah. So things like that, I think it's hard to. I don't know why that's not a part of the curriculum, in high school and things like that, where not just business or how to do, salesmanship of that sort, but just really figuring out, making sure that, understanding how much money you're spending on a credit card or how much debt you have or, what it is that you can afford, right? There's I'm spending X% of my income to rent, I can't go over this, or, what makes sense to me in terms of my future, which maybe, granted, that's a hard thing to gauge, right? But,
right.
Yeah, it's...
I think that's a great way to end it.
It is.
One of the brilliant minds in the world of finance, it's a fancy word.
I like it.
Talking about how there's a lack thereof, this curriculum in our schools. Why is that?
Even in households.
Is it because people are more easily controlled because when they're dumb? They're more easily controlled when they're unhealthy? They're more valuable when they're unhealthy? I don't know. Am I stirring a pot saying that? Maybe. But
right. And it's household though too. But dude, thank you so much for your time today.
Absolutely.
On this podcast, we believe time is the one asset, speaking of some assets, that you don't get back. So you spending it here with us means the world.
Thank you for having me.
From the top of the world.
From the top of the world. And quick fun fact, I shared this with Ty in the car on the way here. I don't know if you guys knew this, but so obviously the country declaration signed 1776. The exact height of this building is 1776 for exact intention. And most people don't know that, but that was built to that spec because of that reason. So at the top of the world, thank you for listening in. We're going to have to do a part 2 because I want to go a little bit deeper into some financial literacy stuff. But this wraps up for part 1. Everybody out there, create an amazing day. You're in charge of your life. Make it happen. Boom. Dude, good stuff. Good stuff.